Alrighty, everybody, welcome into today's video. So this morning I woke up and I noticed one of my stocks was crashing. So let's dive in a little bit and find out why. So shares of India's HDFC Bank fell more than 8% yesterday, their worst day since March of 2020, after the country's biggest private lender reported weak margins for the second consecutive quarter. HDFC Bank was one of the first major banks to report their December quarter earnings, so I figured their results may signal similar stresses with their peers in the banking industry and give us a little bit of insight on the Indian economy, one of the largest growing economies in the world. Their interest income growth has slowed from 16% growth from June to September to a mere 4% growth from September to December. Although, from everything I can tell, policy rates in India have stayed pretty consistent for a while now, and the net interest margin has stayed pretty consistent quarter over quarter for HDFC Bank. So it would appear that the main contributor to this decline would be them not receiving as much capital in the quarter to receive interest on. And in fact, the deposit growth had slowed from 5.3% in the previous quarter to only 1.9% growth in December. Yet year over year, their revenue growth was still up 25%, and that's with 71% coming from their interest income. But one thing I really don't like to see, but I'm not really too surprised about, is the bank's operating expenses grew by 28% year over year. So that's 3% more than the revenue grew, so that's not great. Another potential upset when looking at the income statement is the 45% increase in loan loss provisions, which could hint that maybe something bad's going on with the company, that they're stocking up that much more money, which is actually one of the main reasons they only earned a 2.4% EPS growth in the quarter. This was really only a 3.5% increase, though, when you exclude their contingent provision of 12 billion Indian rupees for an investment in an alternative investment fund, which apparently they are up substantially on now. They noted in their conference call that their total provisions were about 159% of their gross non-performing loans, so it would appear that they have adequately accounted for their risk. The biggest projector I saw in their earnings that could project to how the economy is actually doing over there in India is possibly the slowing deposits, which I thought could mean that it's just getting harder for people out there and they're needing to, spend more money to survive and save less money. And this likely does have something to do with it, since the liquidity across India has been tightening just as it has been in the United States. But in the earnings call, an analyst brought up the fact that there are these other banks out there that are actually giving 7 to 8% interest rates on their savings accounts, while HDFC is only giving around 3 to 3.5% on their savings accounts. So it would appear that likely a lot of those citizens are just taking advantage of those higher rates that they can get from other banks, which is slowing the growth in deposits from HDFC, a more stable, large bank. Which is, fairly normal. And if you were over there, I'm sure you'd be taking advantage of those higher interest rates on savings accounts as well, right? But this does bring me to ask, is this a massive issue for the bank? At least enough to make me change my investment thesis or make me reevaluate the company? And the truth is they gained 2 million customers in the December quarter, and they mentioned in the conference call that the percent of their market share continues to grow. Overall, no, I didn't really see anything in these earnings that made me lose faith in the management team or in the overall company being successful in the future, in the long run. So I'm not really planning on selling any of my position, but honestly, I'm pretty happy with the position size of this company in my portfolio, so I'm not really planning on buying any either. But feel free to let me know down in the comments if you think I missed out on anything that might change my perspective a bit. Have a great day, and please like and subscribe down below if you like content like this. See you in the next one.